maybe to have slightly bigger size. It would encourage me to trade a little more. Maybe it would encourage me to have shorter stops. It would encourage me to double up on my positions. It would double a whole range. In this type of a market, it just says it's corrective, and you just have to be wary, and you have to be quite disciplined. Okay, so I think my point, the answer to your question, Chris, is that just on a weekly basis, it just gives you a sense of perspective. Like, for example, if the euro had broken here, most likely the euro would be down there. It's just, unfortunately, the way the whole world is looking at these things every day, and it's a kind of a frenzy, and then it's the herds. Like, this happened here. I think this was a big monthly or weekly line, and the herd mentality, whoosh. So that's kind of how it works.
Gavan, would I be right in saying that what you're getting from that chart is it's in a corrective or kind of lumpy uptrend?
Yeah.
Okay. If it breaks 135, that's a very serious change of trend.
Yes.
Okay. But there's nothing strong enough on the weekly chart to tell you that I'm only going to be buying.
Well, this, in fairness, is this point here. This is a good fractal here on the weekly chart, and to me, this is a good buy signal. Okay.
And yet you're selling.
And yet
That's
I'm selling,
question.
and I'll tell you why. There is within here on the 60 minutes and the dailies, there's lots of signals telling me that there's a potential going down. Okay, but when we go back to the 60 minutes. What I'm saying is, it's very clear, we've seen a buy signal there, we've seen a temporary one, I can't find her, wherever she is, and we've seen this lad here. If we go above here and accelerate and come back, and we see another good signal, something like this, history will prove this is a great place to buy the euro. And from a trading perspective, if you think about it, everyone's talking about the demise of the euro. Nobody's talking about the demise of the dollar, which is in the worst case. US debt or the European debt? Greece, Ireland, Italy. Does Germany have a problem with debt? No. So who's going to, this whole, I'll be honest, what's going on here is which central bank is going to go bust first? Is it the ECB or is it the Fed? Okay? We don't know, right? But if the treasury market does sell off, right, it's going to be bad for the dollar. And the euro could very quickly. So again, what I'm saying is that on a 60-minute basis, and what you've done here in a very practical level is you've identified two options. One option to go up and one option to go down. And our business as small account holders isn't to challenge the ECB or the Fed where they should think the dollar is. Our business is to make money. So my business is very simple. If this price goes higher and it closes above here and a bullish signal comes along, I'm long. And I don't care what I said down here tonight. I'm going to be long, and I'm going to try and make some money, I hope. We go down here below tomorrow and we accelerate lower and we take out any of these levels here identified and we see a correction with a bearish signal, I'm short, and I'm going to be pushing it to stay short and to trade on the short side. And I'm not going to be reading too much news. The news is going to help me, etc., etc. And what I'm going to do is I'm going to have my stop here or my stop there, and I'm going to try and stay out of trouble. And so you need flexibility, but what I think perhaps what I'm suggesting is that once you have a plan, if you pick 2 or 3 currencies, and every morning and during the day you're looking at your 60 minutes of your day and you have a plan, and you're watching for these little, so this is a neutral zone, and you say, I'm going to watch for price action there, and I'm going to watch for price action there. When you turn it on and you get it, it should say something to you. Okay, the next stage of my plan is I'm going to wait for the correction, or I'm actually going to trade. And I'm going to place my stop there, or I'm going to place my stop there, and have a go.
Gavan, I have 2 questions. That Monday in May that you talked about earlier, can you explain the market dynamics where everybody has a bearish position and the thing suddenly takes off?
Very simple. Very simple. What it is that you have, the banks have lots of stops, and they're executed in Asia, usually about 4 o'clock in the morning. And what's happening in the market is there's two major players out there. And one is the Bank of International Settlements, which is a quasi-intervention on behalf of the different European central banks and other central banks. And secondly is you have the Asian central banks. And what's happening is that the globe is so worried about the US debt market that they all have long US Treasury bonds. So ultimately, they're all long US dollars. They don't have enough balance in their reserves. They're long too many dollars as a central bank. So from European, like the Chinese have very, relatively few dollars, or relatively few euros relative to their dollars, because China is funding the world. I mean, China has been funding, in particular, the States for the last 3 years. But yet, they're holding all these dollar assets, but they only may have about 20% of foreign exchange reserves. So what they do is they look for low points like this. This was China. China bought at the lows here, and the same on the. So what can happen is you have these central banks that come in maybe by 400, 500, 600 million, 800 million, and they just basically force the market out. That also, you have to remember, there is a game of cat and mouse here, and what you have is, now this is my own personal opinion, so anyone from the central bank, I'm sorry, but the thing is that what you do have is, the euro is in crisis, okay, and they're trying to keep up the stability of the currency. And in my opinion, they've done a very good job, okay? They've also been helped by a very weak dollar. But and you also have Bernanke who wants to debase the dollar, okay? So the bottom line is that the ECB have a policy of trying to keep rates as high as possible here in the core part of Europe, or northern part of Europe, to kind of give it some value. And you also have the Asian banks who need, and the other central banks, who actually need to buy euros and sell dollars to beef up their reserves to cope in the event of a US default. Because they own bonds at certain prices, and if they collapse, they're going to have a negative balances. That's what the central banks are doing at the moment. Like if Greece defaults, it's the ECB who's going to lose more money than Bank of Ireland or the French bank's BNP. It's the ECB. So the ECB's balance sheet is going to be wiped by 30, 40%. They don't want that. If the Italian banks fail, they have to fund them. They have no money left. And the ECB can't print money. It's one of their prerequisites. So what you have here at these type of levels is you sort of have a quasi-intervention. The Bank of International Settlements or other Asian central banks will just buy at these levels. And I'm quite comfortable saying that they bought there and they bought there, and they may have even been involved there. It's just they see an opportunity where the market gets itself short. It wants to go lower. But unfortunately, markets are bigger than these entities. And what will happen is that events will happen where they will not be there one day. They may have bought enough euros to hedge whatever exposure they have, or they've bought enough for their mandate that they have internally. And this thing will start potentially could start creeping lower and accelerate down.
Yeah, and my second question relates to that decline. I agree with your premise. I think the dollar is going to strengthen. And is that the right phrase? It's the dollar that may strengthen rather than the euro weaken, or is it the other way around?
Actually, I tell you, I'm going to take it.
And my second question, second part of that question is it conceivable that we could be in a really unusual situation where gold and the dollar strengthen at the same time?
Yes, we could. We're in a really unusual situation at the moment. Everything is unusual at the moment. And I'll come back to really, as I think I said, about looking at the macro picture rather than the micro facts. So just let's take it first of all from a technical perspective. What we've seen here is we've seen the dollar accelerate in 2007 and 8. We've seen the stock markets crash 2007 and 8. And we've seen commodities go down in 2008. And what tends to happen then when you have a big movement down is you have a period of correction, consolidation, and kind of irregular trading. And when you have such an extended move and you have such deleveraging of the world economy, that you have very, very irregular markets afterwards. And that, to me, is all signs of corrective market behavior. All very normal, very frustrating as a trader, but that's what you have. And eventually, and I think it's soon, it could be this week, it could be starting already, it could be maybe October, November, it could even be early next year. But I believe that we'll start seeing this starting to wash out, and then you start seeing an acceleration down. In terms of answer your question, the dollar, why does the dollar go up when bad things happen? Well, very simply is that most hedge funds and most banks and most speculating entities, what they do is they have position in gold and they have position in US equities, they have position in oil, and all these commodities are denominated in dollars. Okay? Now what happens is that they also, because a lot of these are systems driven, they're generally also